Hello students, good morning and welcome back to the online class. So we'll continue with the practical problems on departmental accounting. So take down the next problem. So copy down this problem. Okay, so from the following trial balance of Accenture Limited, prepare departmental accounts and the balance sheet as on 31st March 2021. So they are given the share capital. Share capital means it's a company. Okay, you have to follow the company balance sheet format. Then buildings and machinery is an asset that is required. That is recorded in the combined balance sheet. Then they are given the opening stock of both the department, purchases and sales. So debit means purchase, credit means sales. Then they have given the common expenses, that is general expenses, 14 lakh. Debtors and creditor is an asset as well as liability. Cash at bank is an asset for me. Next is the additional information. Closing stock of department A is 1 lakh 30, including goods from department B 40,000. Means department A का closing stock 1 lakh 30,000, in which 40,000 is the goods from B department, that is called interdepartmental transfer. Okay. Closing stock in B department is 2,60,000, including goods from A department 90,000. Similar, it is interdepartmental, and both the departments supplied goods at its selling price. This is important. See, they have supplied with their selling price, means they have added the load price, means the profit. In the previous problem, the interdepartmental transfer was taking place at cost price. At what cost you manufacture, at same cost you are transferring to the other department. But in this problem, they supplied at, or they transferred at selling price. Means they have added the load price. So what you have to do, you have to remove the load price, means you have to prepare general profit and loss account. Okay, if it is cost price, then it is then no need of preparing general P&L account, because there is no question of adjusting the reserve, right? But they have transferred with the selling price, means you have to adjust the reserve, that is you have to adjust the load price. So you have to prepare general P&L account. Second adjustment, sale of department A include 2 lakh transfer to department B, and sale of department B includes 3 lakh transfer to department A, both at selling price. Again, it's at the selling price. Depreciate building by 5% and 10%, that is machinery and building. Create 5% reserve for doubtful debts and 7.5% reserve for discount on creditors. So on asset, if you are creating the reserve, then it is expenses. On liability, so this is my liability, on that if you are creating the reserve, then it is an income. Now they have not given the apportionment ratio of doubtful debts, discount on creditors, depreciation, general reserve. So if you are preparing general P&L account, then you can take these items in general P&L account. If you are not preparing general P&L account, in the sense, if there is no load price, okay, there is no load price, means no need of preparing the general P&L account. In that case, you can apportion these expenses equally among the department. But if you are preparing general P&L account, here you have to prepare general P&L account. Why? Because the transfer is taken place at selling price, then you have to prepare general P&L account. So these are the expenses you can take directly in the general P&L account. Okay, no need of apportioning it. So now, then what we have to take in departmental P&L account, right? It's okay, that's the question that arises. So in such cases, you just prepare trading account, because trading account, you see here, opening there is an apportionment, purchase and sale there is an apportionment, closing stock it is given separately for two departments. So you can prepare trading account. But other all expenses which is coming in P&L account, the apportionment ratio is not given, so you directly can take it to the general P&L account. So you just prepare departmental trading, then general P&L account. If any item the apportionment is given, and that item is affecting your P&L balance, or that item is to be recorded in P&L account, then you have to prepare departmental trading and P&L account. Then you have to prepare general P&L account. Those items which cannot be apportioned, or the ratios is not given, then that item you can take in the general P&L account. Okay, if any one item that is appearing in the P&L account, that is to be entered in the P&L account, if the apportionment ratio or the apportionment figure is given, then you have to prepare departmental profit and loss account also. But in this problem, the item which is to be recorded in trading account, that apportionment is given, but the other items the apportionment is not given. So what we do, we will prepare departmental account only, that is trading account. Okay, the columnar trading account, and P&L account will prepare general P&L account. Okay, so now you first draw the list for departmental trading account. After departmental, you have to calculate the ratio. Okay, gross profit, sorry, you have to calculate the gross profit, because you have to remove the stock reserve. I think we solved one problem regarding this, right? To remove the stock reserve, we have calculated the gross profit, that is gross profit rate. Okay, so first we will prepare the trading account. After ascertaining the gross profit, we will calculate the gross profit rate. Draw the lines. Okay, you have to start with the opening stock. If you want, you can add one total column here. On the both the side, you can add one total column. So start with the opening stock. So it is 30,000 and 40,000. So after opening stock, so they have given purchases including transfer. Okay, you can take including transfer. Then along with purchase, they have given sales. Sales including transfer. Then closing stock, that is total closing stock. So the difference will be gross profit. Total 21 lakh 30,000 and 35 lakh 60,000. And the difference, that is gross profit 11 lakh and 90 lakh 20. Okay, so after this we will calculate the gross profit rate. Why we are calculating gross profit rate? Because to remove the load price from the closing stock. So here they are given that the transfer is recorded in the closing stock and not the opening stock. Okay, so we have to adjust the load price only from the closing stock. So you write calculation of rate of gross profit. So you have to calculate the rate of gross profit for both A and B, because in both the department there was an inter-transfer of goods. There is an inter-departmental transfer in both the department. So you have to calculate the gross profit rate for both the departments. Now what is the formula for gross profit rate? The gross profit into 100 divided by sales. So this is the formula. Gross profit divided by sales into 100. Now we'll calculate it for department A. Now you see your departmental trading account. In that, what is the gross profit of department A? It is 11 lakh and the sale is 20 lakh. Okay, sale is 20 lakh. You will get 55%. So gross profit, that is gross profit rate, that is of department A, is 55%. Similarly, calculate for department B. So you have to calculate the gross profit rate for department B first. So the gross profit, the rate of gross profit, that is for department B. So gross profit 90 lakh 20,000, sale 32 lakh. It comes to 60%. 60%. Okay, next we'll calculate the reserve amount. So right, working note number 2, calculation of stock reserve on closing stock. So here it is, the stock reserve is there in only in closing stock. The load price is included only in closing stock. See adjustment number 1. They have given the information regarding interdepartmental transfer of only the closing stock, and they have not given any information regarding the opening stock. So we assume that there is no interdepartmental transfer in the opening stock. So we calculate only the stock reserve for closing stock. That is now A department. What is the inter-transfer amount that is included in closing stock of department A? See adjustment number 1. It is 40,000. And what is the rate? Now you have to take the rate of department B, because inter-transfer department for A, B supplied the goods. Correct? B will supply the goods to A, means the B will add is gross profit. Is profit he will add. So 40,000 is been transferred by B department to department A. That is 40,000. At what rate? The gross profit of department B. So the stock reserve is 24,000. And department B, A will transfer the goods. A will transfer the goods. So the percentage of A department, and the 90,000 it is given in the problem. Closing stock of B department include 90,000, that is the transfer from A department. So gross profit of A department, that is 55,000. So it comes to 49,500. Okay, after this you draw the lines for general P&L account. Okay, so you have to start with the gross profit. So as we didn't prepare the departmental P&L account, so you have to start with the gross profit. If you prepare the departmental P&L account, then you have to write your net profit. Okay. If you are preparing departmental profit and loss account and you ascertained the net profit of each department, then the general P&L account start with the net profit. If from departmental trading account, if you are preparing general P&L account, then it is gross profit. So you write by gross profit A department as well as B department. Next, now you see the trial balance. There is one expenses, that is general expenses, that you have to take here. So expenses should be debited. Okay, next, see adjustment. So there's a depreciation. First on building, that is 5%. So the value of the building is 1,25,000. On that 5%, 6,250. Then machinery, 25,000 into 10%, it comes to 2,500. Okay, next there is a reserve for bad debts. So on debtor you have to calculate. So it's an expenses. On asset, if you are creating the reserve, that is expenses. If you are creating on liability, then it is income. Okay, so buy reserve for discount on creditors, that is 1 lakh into 7.5%. So both we have to deduct from concerned item. Our reserve for bad debt to be deducted from debtor, reserve for discount on creditors to be deducted from creditors. Next. Next you have to adjust the stock reserve. Now you have calculated the stock reserve on closing stock, right? So you have to record it on the opposite side. Means the closing stock you record on the credit side of trading account, so the reserve should be recorded on the debit side. If you are adjusting the stock reserve from the opening stock, the opening stock you record on the debit side, so the stock reserve to be recorded on the credit side. Just a reverse, means the opposite side you have to enter. So closing stock is a credit item, the reserve to be adjusted by writing on the debit side. Okay, so the difference will be either net profit or net loss. So your credit side is more, so it is net profit. So now you do the total and find the net profit balance. So the total is 30 lakh 27,500 and the net profit is 15 lakh 35,250. Okay. So after this, draw the lines for balance sheet. That is combined balance sheet. Balance sheet as on 31st March 2021. Okay. So to start with the share capital, and here as they given it as a share capital and this is the company, you have to follow some format. Okay, so share capital you have to write separately. The net profit you have to show it as a profit and loss balance. You have to follow the company ka balance sheet format. So if it is only the capital, if it's only the capital or the one person who is running the business or the partnership, in that cases you can add the net profit to the capital. But this is the company and they given separately, that is share capital means they issued the share. How you get the share capital? They issue the shares and the public will subscribe. So the share capital is subscribed by the public. So you have to show it separately. The net profit you have to show under profit and loss account. So profit and loss, under that you show it as show net profit. Okay. So share capital 3 lakh. Then you write profit and loss, under that net profit 15 lakh 35,250. Okay, next item. Buildings. So write amount in the inner column, you deduct the depreciation. Buildings less the depreciation. So next, machinery less depreciation. Next, debtors less RBD, that is reserve for bad debts. Then creditors less reserve for discount. The reserve should be deducted. So RBD from debtors, discount on creditors from creditors. So next, cash at bank. So then there is a closing stock. So closing stock, from that you have to deduct the stock reserve. Okay, so from closing stock you have to deduct the stock reserve, because the closing stock to be recorded at cost price and not at the market, not at the selling price. Okay, means the closing stock we don't add any profit on the closing stock because that is not sold. So the rule is the closing stock to be shown at cost price. So we deduct stock reserve from the closing stock. So this point you have to keep it in mind, that is the stock reserve to be deducted from the total closing stock. Okay, now we do the total, your balance sheet will tally. So your balance sheet total is 19,27,750. Okay. So I end today's class till here. So remaining problem we'll see in the next class. Thank you.